What's up, dough chasers? My name is Jason White. I'm the CEO and founder of Witness Riches. Today, we're going to be talking about what happens when your credit building loopholes begin to close. I'm making this video not to bash you. I understand your predicament and I understand the urgency to fix your credit. I'm making this video to inform you so you don't make mistakes. I've been helping people improve their credit through my organization, Witness Riches, since 2013. Over the past few years, we've helped more than 10,000 people take their credit to the next level in our credit repair service, okay? I'm very knowledgeable about credit building, finances in general, and I want to make sure that the information that I share with you helps you, okay? So let's talk about the current climate when it comes to loopholes to fixing your credit, to raising your credit score. Let's talk about that. You are looking to take your credit to the next level, and someone has introduced the option of buying an ACE trade line, okay? The ACE trade line is basically adding you to someone's account and you benefiting off of their payment history and their length of history as well, okay? I made a couple of videos addressing this, and you can check those videos somewhere up here, okay? But basically, credit bureaus and furnishers in general are beginning to catch on to these loopholes, and they're making it harder for these loopholes to benefit you. And in those videos that I shared with you above, I talk about how these loopholes are beginning to close and how you need to rethink your strategy when it comes to building your credit and why you shouldn't purchase ACE trade lines. I need you to understand that a trade line is nothing but an account that reports payment history on your credit report. A mortgage is a trade line, a credit card is a trade line, a car note is a trade line, a student loan is a trade line, okay? All of these are trade lines. The trade lines that you are looking to obtain are the ACE trade lines or authorized user accounts that are being sold to you. I want you to be careful with these accounts. Please watch those videos so you can learn more about that. But what I want to talk to you really quick about, without going any further into the ACE trade line talk, let's talk about the recent trade lines that are beginning to lose the benefit of reporting payment history to credit bureaus. We're talking about Experian, TransUnion, Equifax. These credit bureaus are beginning to close accounts and making it impossible for particular companies to report payment history on your credit report. And I have a couple things I want to cover in my notes to make sure that I address everything. First and foremost, accounts such as New Coast Direct or My Jewelers Club, for example, and accounts that relate to those, these accounts are beginning to lose their capability of reporting payment history on your credit report. And typically what happens is they offer you a line of credit and you have the option of purchasing the merchandise. They report that payment history, that line of credit onto your credit report, and basically that line of credit begins to impact your revolving credit utilization. And as you know, this is 30% of your credit score, so impact on how it helps your credit score and improves your credit. Well, credit bureaus are beginning to catch on to these loopholes, and I have a couple reasons why they are beginning to close these accounts. Now, this is all speculation. This is not factual. However, based off of my experience, it is an educational guess. The first reason is these companies are in violation of the terms. Typically, when you are reporting information as a furnisher on a credit report, you have to look at the true definition of a trade line. You are basically trading something for a line of credit, okay? If your credit card company gives you a credit card, they're giving you that line of credit because you are going to use that line of credit to trade merchandise. You're going to use that line of credit to obtain something and then pay it back. Well, looking at the business model of a lot of these companies who are beginning to lose the ability to report payment history, New Coast Direct and My Jewelers Club, for example, a lot of these companies are not making it mandatory for you to purchase their merchandise. Now, I know with My Jewelers Club, you have to make a purchase in the beginning. However, each year they renew that account for $99 and you don't have to purchase anything. I believe that credit bureaus are beginning to catch on to this and they see it as a loophole in which people are beginning to take advantage of this to hide their true creditworthiness, which is my second reason. Credit bureaus are in the business of providing information to their clients. And believe it or not, you are not their client. Their clients are businesses that use that information to sell you products and then offer you financing. And if they're using information that's not correct, that's not showing your true creditworthiness, then they are at risk. And because credit bureaus are beginning to catch on to these loopholes are hiding your true creditworthiness, because if you add a $10,000 line of credit to your credit report and it boosts your credit score from a 580 to a 720 in a matter of days, have you really obtained the habits to truly pay your bills on time, to really earn that credit score? And a lot of you have not, which is why a lot of accounts still go into delinquency. That's why you see a lot of accounts being charged off, sold to debt collectors, a lot of cars being repossessed, a lot of mortgages being foreclosed on, because you're not obtaining the true habits to maintain these line of credits. Credit bureaus are catching on to that, and they're protecting their true client, which are businesses. So for those two reasons, I believe they're beginning to end relationships with companies who use that as a service to you and I. They're beginning to close that relationship because they don't want it to benefit you. They want you to truly earn that credit score so their client is not at risk. I mean, think about it. If I have $10,000 to loan and I have client A who has a 550 credit score, but I know that this guy is not paying his bills on time, he's not really meant to be trusted. But I also have client B who's the same person, but they have masked their credit report and I can't see their true credit score because, they took advantage of a loophole and their credit score improved. So I see these same two people who are the same, but one has a 550 credit score and one has a 700. I'm going to loan my money to the 700 credit score, but unfortunately that 700 credit score that has used the loophole has not truly obtained the money management skills to maintain the payments on that loan. And I basically lose my money, right? They're catching on. Okay. So this is what you need to avoid. You need to avoid loophole trade lines, companies that are promoting a line of credit in which you truly don't have to use their, but they're going to report that payment history as a benefit to you. You want to be careful with these companies because, again, credit bureaus are beginning to catch on to the loopholes, and they're shutting down the relationship with these short-term companies. You don't want to pay $200 for a trade line, and then if the trade line ends up not reporting your credit report, it's a waste of money. You also want to avoid purchasing aged trade lines because the industry is beginning to catch on, and they're making it harder for those aged trade lines to actually impact your credit score. Okay. Now, I talked about this a few years ago. Some of you have listened, some of you have not. And I'm beginning to catch on that a lot of people are talking about this more and more. I just want you to know you heard it here first. So be careful with those. All right. Just avoid anything short term. All right. If you focus on the long term path and, taking accountability for your actions and focusing on implementing solutions that are going to get you the results that you want long term, you're going to have to earn the points. However, you won't have to worry about losing the points because TransUnion ended the relationship with the company. We have to get out of this loophole mentality. We have to learn how to do it the right way, even if it takes time. Okay. We have time. Time is not running out. Quit rushing the process. Trust the process. Do it the right way the first time, no matter how long it takes, and you won't have to do it again. All right. So I just wanted to make this quick video to give you insight on what's going on in the industry. Hopefully this information is helpful. Make sure you check out those videos in which I talk about aged trade lines and trade lines in general so that you can educate yourself and be up to date with what's going on in the industry and you don't get taken advantage of, okay? If this video has been helpful to you, do me a favor, like and subscribe to the channel so that we can continue to stay in contact and I can continue to share relevant information with you that's going to help you transcend financially. Again, my name is Jason White. I want to thank you for your time. Don't forget to hit that like button and subscribe to the channel. I'll see you in the next video. I'm out. Peace.